And as always, we're going to be looking for accurate context, good risk management, and always exercising good patience.
Anytime you're talking about fundamentals in a market and direction, fundamentals take a little bit of time to play out.
We got crude oil today, kind of trading yesterday's value area really nicely, low to high.
That's what we're here for, is to put ourselves in the best success. A trading routine does that, builds that habit, lets you know what to work on, what to reflect on, and what to improve on the next day.
Good morning. Welcome to the Market Forecast. Today is Thursday, April the 21st. I'm John Hoagland. Thanks for trusting me with your time. Hopefully, if you're in the markets already, you've got things going your way. As always, we're focusing on seeking accurate context, good risk management, and if anybody needs me to remind them to be patient, please remember to be patient. Patience pays. Economic releases this morning, 7:30 every Thursday. We get the jobless claims. The last jobless claims, initial jobless claims, last week was adjusted to 186,000. They were looking for 180,000 today. It came out at 184,000, so higher than expected, but lower than last week. Mixed information, perhaps. Continuing jobless claims, they were looking for 1,455,000. Considerably less than that this morning, 1,417,000. The Philly Fed Index, which is meant to kind of gauge the amount of business going on in Philadelphia, was looking for 21, came out 17.6, so a little bit concerning there. We're still waiting for misleading indicators at 9 o'clock, nat gas inventories at 9:30, and we've got the chairman, Jerome Powell, speaking twice today, once at 10 o'clock and once at noon. So who knows what he's going to be talking about. Then there'll be a moratorium for talking Feds until 2 weeks from yesterday when the FOMC meeting comes out. So we won't have to listen to what they have to say too much for the next couple of weeks. As far as what traders are kind of focusing on this morning, the U.S. stock indices looking kind of chipper this morning after Tesla's smash earnings. Nasdaq recovering much of the losses that it incurred yesterday. It was really under the spell of Netflix for the last couple of sessions, and we've got a little bit of relief for the Nasdaq traders, Nasdaq longs that is, this morning. ECB has put a July rate hike in its sights. This would be the first ECB rate hike in 12 years. American Airlines is a hot topic here this morning as they've painted a rosy quarter two forecast for the travel and airline industry. A little bit of an acceleration in earnings this morning. We got a long list of them, although many of them less impactful than the ones we've seen over the past few days. Just to name a few this morning, Nestle came out this morning, Philip Morris and AT&T. This afternoon, we're looking for Snap, First Energy, and Boston Beer. If you like Sam Adams, you'll wonder how the company's doing at the end of the day today, and maybe even have one of those beers. As always, make sure you hit the lucky like button, share, comment, question, feedback, heckling, and love are all welcome here at the top at the Market Forecast. And subscribe to our YouTube channel. You can get notifications when we do go live. And speaking of going live, this afternoon at 3 o'clock, it is time for the Limit Up podcast. Dan and Jack will be talking about trading-related subjects, and I always look forward to watching them. So there will be no recap today as typical on Thursdays. However, we do have Make Hoag Money today. Here is the link so you can register and join us. This is right after the market forecast at about 8:20. So we're gonna not rush through, but we're going to take care of business in the forecast here so we can get set up and be in the Zoom room for Make Hogue Money. What is Make Hogue Money? Oh, at 8:20. It's going to start at 8:20. What is Make Hogue Money? Well, it gives us the opportunity, gives you the opportunity to speak up, to talk about trades, and to try and make me money. I am not making the decisions for this. You are. We're going to have few people maybe ready and able to speak verbally. They're going to be able to share their charts. We're going to have polls to say, okay, do we like this trade? Do we not take this trade? It's still a something kind of in progress here. We're trying to make it more efficient in the way we're looking at trades and making those decisions more quickly, but always looking for feedback in this. Always looking for feedback. If there's something you want to see, something we're missing, something you think we can do better, please make sure and let us know. This morning, the VIX is back down under 20 at 19.98. Dollar index off just a little bit, still up over 100 at 100.22. And the yield on the 10-year off a little bit from the settlement from yesterday, 2.86%. As always, got to say good morning to everybody, and Dan Trader is first in the room. Dan, you win the prize this morning. George, Bill, Brian Hendricks, Tachyon, good to see everybody. Sean, good to see you. Vince, we're going to have to see what kind of fish you're biting. We'll try different kinds of bait throughout the day, probably. Brian Scott saw, and he conquered. Brody, Theo, good morning. Jockalo, Zachary, Glimmer Sandwich, good to see you. Terry, Alfred, James, I'm reminding you again, stay patient today. Patience pays. James, afternoon for you. You must be overseas. It's great to have you with us, and thanks for popping in and saying, hey, I need somebody to tell me to be patient today. We all need that. Absolutely. Devant, Marcelo, Frederick, Luis, Armad, Scammer. I don't know what that means, but you're welcome to see and glad to see you anyway. Sarah, prayers and love and a beautiful dawn to you as well. Zachary, Rusty Golfer, Expediter Dean, Elizabeth, good morning. There's a new name. Welcome to the Market Forecast. Thanks for chiming in and saying good morning. Dead letter opener, what's happening? Tachyon got spoiled by U.S. market. Fast EU session became too slow. 160 profit so far. You're up. It's a good thing. Trading research, John Doherty, JD, good morning, my friend. How are you feeling this morning? Placed an order to buy gold this morning. Vince talking about a trade. Would have been filled. Well, whenever I say should have, would have, could have, might have, anything like that, reminds me there's always more to know, always more to learn in these markets. Jules, good morning. Dan Emmons, good to see you. Good morning. Grinding towards 4,500 in the ES. Yeah, that NQ almost back to yesterday's range. Keith, good morning. My brother Rick, good morning. I love you. Joe Drinnen, sorry. Good morning, Hogue. This AM review is becoming a must-see. Well, I'm good. I'm glad. I'm here to help. Love Make Hogue Money because I see approaches and that add value. Excellent. Glad to know that. Thank you for the feedback. Anything we can do better, anything I can do better, let me know. The Unknown Pea Shooter. Good morning. That's a nice chat name. I like that. I consider myself a pea shooter myself. And welcome. Thanks for saying good morning. As always, I like it when people just stop by and say hi. Stephen C. Donatus. Good morning. There's another new name. David. Good day. James Swan. Love your guys' support watching from England. Over across the pond there. Maybe after the forecast and the Make Hogue Money, I might have some tea and crumpets. I think we call them English muffins over here, but looking forward to a little breakfast, perhaps. Nico and Michael H. Good morning to everybody. Okay, we're going to get into the charts right off the bat here. Again, here is the link for Make Hogue Money. In case you missed it the first time, here it is. And let me see if I can get this program straight here, and let's get into the charts. Starting as usual with the daily in the S&Ps. We've got things set up. Let's take a look. All right. So higher pricing is sustaining volume. You see here, we got some, a little bit of uptick in volume after the turnaround here on the 14th, 15th. Higher volume here, higher volume here. Are we seeing open interest continuing to come in? No, we're not. Open interest has continued to fall for the last couple of days, including losing 17,000 yesterday. A bit of a shocker to me. I was looking forward to seeing an increase in open interest and even a rather substantial one from yesterday's activity, just by what we were looking at as far as Delta is concerned. Now, the Delta, we got a couple of things to talk about here in the S&Ps. First off, let's stay where we're at here. We're looking for context. Well, we've got a medium time frame break. Okay, we got a medium time frame trend to the downside here. Some have speculated that this is a bull flag in the move back to the upside. This is looking more like a bear flag as part of the activity today. So the recent activity, I'm not impressed by it because we're not bringing in open interest. Open interest is falling off, indicating that this isn't being created by new money getting long. It's being created by shorts getting out, shorts covering. We know we had a P-shaped profile here on the 19th. We had a late spike that tried to get reacceptance in value from the previous day, which was denied because we got our short time frame traders too short, looking like they were absorbing longer time frame traders getting out of shorts. Getting out of shorts takes buying power out of the marketplace in the longer time frame and places that onus on the short time frame. So what are we doing here? There's a lot of information, and somebody said something the other day that I haven't heard in a while. We all have to have kind of a ruling reason for the trades we take. There's all kinds of nuances that are indicating the market could go in different directions for different reasons. What's the most important thing at that time? All right, so here's yesterday. So yesterday, I'm going to make this big so we can see it. So I just moved that. Let's put that back where it was. That's approximate. So yesterday, we knew we had an assumed late spike. We opened above that late spike and we traded basically almost right to the base of that late spike. As a matter of fact, within a tick of it. Maybe if we look at the TPO charts, this will be a little bit more clear. And not so clear so far. Hang on. Oh, this is goofy. Okay. So I'm going to split this so it's a little easier to see. So where was the base of our late spike? We talked about the base of the late spike being right down here. I think it was 44.52. Well, we traded right down to that early in the session. We created a pretty decent long opportunity to the upside. Now, as we continue to see Delta increasingly negative throughout the entire session yesterday, but the market was having a real hard time. It was struggling to go to the downside. Now, we were looking at the afternoon pullback low yesterday, which was right down here as a potential for an opportunity for a long. The market wouldn't even give us that. It took us down to the point of control from the previous day before exhausting the sellers and then continuing this push to the upside, which we are currently in now. What do we have as far as the overnight inventory? We're holding some pretty substantial longs here. This purple line here is last week's high or low. I'm pretty sure it was the high. Hang on. We want to know this. Yeah, it was last week's high, and this is off a little bit here. It was last week's high. Here it is. So we're dealing with last week's high. We know that we broke out of an area of balance. We're seeing some continuation in this area, in this move to the upside. This would be the bottom trend line of what might actually end up being a bear flag. So I'm going to be watching this trend line carefully. Settlement is down here, 44, 55, 50. We've got a lot of overnight longs in this market, and it appears as though we are going to be opening with a gap. Well, now we've got gap rules in play. We don't have a late spike. We just got the gap, and we've got a whole lot of overnight longs here. So there may be an opportunity for us if we are looking for a chance to buy it down against this trend line. If we get some inventory adjustment, that might give us a place to fish and to be able to limit risk. If we can't hold this trend line, we've got other levels of importance in yesterday's session with which to look for opportunities. Headline risks are still out there. There's still so much uncertainty in the world and in these markets. You got to keep your ears and eyes open. If there is a major move, a fast move in this market, it may indicate that there has been some sort of an event, and we're going to see it in the markets before we even think about seeing it in on the news. Markets are going to beat us to that punch. We've got a naked point of control up here that looks like we're going to be checking right off the bat here on the open. And again, gap rules. If we can't close the gap relatively early, we've got this trend line here that might give us a nice opportunity. The ruling reason, I'm not that confident in this move to the upside, but I'm not going to start looking for shorts until it gives me a reason. A gap close, a move below this trend line, acceptance inside value from yesterday may bring the value area special situation play into play, which takes us back down to the low of value yesterday. Whoops. I hate that when that happens. This naked point of control here, depending on what you're looking at, was checked yesterday or not checked yesterday. We've got plenty of weaker structure well below the market, and we've got the opportunity always to keep eating shorts. That's what this market does. No matter what happens, if there's no new bad news, the market just tends to continue to grind higher and eat shorts. But again, the move the day before yesterday, hollow. We lost open interest. This was short covering yesterday. The market moved. It tried to move lower. Didn't do it very successfully. And you can see the amount of negative delta that was accumulated. More than 20,000 negative delta. That's more than 20,000 contracts more trading on the bid than on the offer. The traders yesterday were more aggressive, and I'm looking at shorter time frame traders that may still be holding some of those shorts. Newer short time frame trader, overnight traders may be holding longs. It's going to be quite the battle. What was it yesterday, Vince? The World Trading Wrestling Confederation, whatever it was. Oh boy, I've never lived through a period of certainty. How about it, right? Yeah, it's everybody's opinion is valid. That's what we're trading is people. We're trading emotions. We're trading opinions, and that didn't look too much like a bull flag to me, but time will tell. All right, let's take a look at the. Oh my God, I'm getting so long-winded here. All right, crude oil. We're still coiling, still building energy, still in short time frame control. Expiration was yesterday. Overall, we lost 6,200 in open interest. But overall, if we just take out what expired yesterday, we added 4,000 in open interest. Volume, open interest should be a lot more clear now for the next 3 weeks, but we're still here kind of hanging around. An 8 million barrel draw yesterday fails to move price. Expiration yesterday. Seems like this market is looking for new information, doesn't it? Here's the 30. Okay, we've got potential repair on both sides of the market. We've got an unfilled gap here. We've got an unfilled gap down here, which also contains a naked point of control, the next naked point of control to the downside. We have a naked point of control up here to the upside as well. So the market is really kind of stuck between a rock and a hard place here. I'm very unconfident in anything that I'm looking at here early in the session, which may be wrong. We may have left the opening range at the low, which takes us right back down to settlement, which any overnight longs have now been reconciled and now welcome to come back into the marketplace. We're looking for short time frame levels with which to operate inside of that pennant, because largely it's the short time frame traders who are running this market up and down. Let's look at the 1 minute, see if the opening range is the low of the session. And it is. 21.56. We've got a, what is that? 35 tick opening range. And boy, we're certainly driving above that. So don't want to fight this move, especially if this thing starts to continue to push higher in a longer time frame. Seemingly rejecting value from yesterday. Overnight inventory again gone. Where are we looking for opportunities for shorts? The first one I see here is kind of like our overnight high. Overnight low also looks interesting. If we continue to grow legs here, I don't want to fight this until we get the opportunity to close out some of this gap here and have the opportunity to trade again at weekly kickoff high. Be careful. It's kind of a random walk, if you ask me, in crude oil. Now let's look at the Nasdaq. Yes, draw means less oil. Hey, Matt, how are you? It's good to see you. Yeah, the EIA announced yesterday a draw of 8 million barrels in crude stocks. You'd think that would make price go higher yesterday. Maybe it will today. Nasdaq, here's the 30. Let's take a look at the daily. So where the S&Ps and the Nasdaq are different, we're still range bound here. This is the daily chart. We're still relatively range bound. Where in the S&Ps we've attempted to break out to the upside. Are we successful at it or not? Debatable. But we're still in short time frame balance here. This market was under the spell of Netflix for the last couple of days. We got a little better news from Tesla yesterday, but I'm still in range bound rules here. Range bound rules. We haven't broken out. We haven't accepted outside of the range that we've been in for about a week and a half. Take a look at the 30-minute chart. Yesterday's late spike to the upside got walked through because of that information. When we were thinking about yesterday, we traded to the naked point of control from yesterday in the S&Ps, and that all of our trade was here. The Nasdaq is presenting weaker as it has been. We've got a whole lot of overnight longs in this market. We're not going to be opening with a gap. We're going to be kind of wrestling with all of these overnight longs. If I'm looking to buy this market, which may be the right thing to do, I'm going to see if we can get some sort of an inventory adjustment off the open, better trade location as the day goes on, because we are in range. They're such similar products, but so different in situation. Gold. Okay, yesterday why is this coming up the day, the 30? Yesterday, on a continuation or a move to the downside that kind of resolved to the upside, we lost 2,900 in open interest. Is that some short covering coming into this? Looking at it this morning, we're at risk of coming back and getting mired in all of this previous consolidation here. We're going to have to accept at some point below the weekly kickoff low, which is 1952. We're kind of fighting it right now. But if we continue to find acceptance below 52, that's going to put us back in this area of consolidation, which I really don't want to do, but I don't get to choose that. Take a look at the 30-minute chart. I even have it in my notes. If we fall back to and accept that area of balance that we were in for 3 weeks, I have a yawn. Okay, overnight inventory was short. We've been reconciling that overnight inventory since the open, taking us right back to where weekly kickoff low. It's been a bit of a nightmare through yesterday, although there were some opportunities for shorts below. There were some opportunities for long above. I suggest not doing that because we're spending so much time in and around that important inflection level. Volume and open interest were both lower yesterday. Again, as we hang around that area, as decisions start to be made, this is a kind of a tough area. Most of the time when we approach it, I look for a move quickly away from it. This is one of those situations where it has become somewhat magnetic, and I don't like that. So we open with a gap. We close the gap right away. Last week's low was in play. It is now behind us. We're in range and in value from yesterday's session. So we opened outside of range and outside of value. We have a move back to an attempted acceptance of value from yesterday. Also a test of this important inflection level. I'm relatively confident at some point it's going to be an opportunity for us to finally get the move away from this area. When that is, I don't know. It's in the neighborhood now. It does allow us to put a line in the water here because, again, it's an important inflection level. It held in the overnight, broke, coming back the other direction. Here, it held up here in the overnight, back down below it, found resistance for a couple of hours. Then it broke out to the upside and found support there for the rest of the session. It's a bit of a kind of a random walk. Just the fact that it gives us the opportunity to limit risk is the only reason that I like this area. And some of the best trades I've made have been made solely because they were so cheap. All right, now to the euro. So we got news from across the pond. The ECB is talking about a rate hike in July. That's the first rate hike in 12 years. Blah, blah, blah. Volume was higher off this weekly kickoff low here. Open interest, we add 4,200. So there's a degree of reversal in the volume and open interest information that we're looking at here. The ECB rate hike talk did lend a bid to this, taking us basically right to the last week's high and then finding some resistance there and then coming off. Here's the 30-minute chart. All right, so there's, just about as the London session was opening, that information came out and drove us higher. We've opened with a gap. We're holding some overnight longs that are probably more likely reconciled at this point. We still have been unable to close this gap, which gives us the opportunity to say, okay, if we have a ruling reason, we've got value moving higher. We had volume and open interest moving higher. If we're going to continue higher, we're going to try and buy weakness. A failed attempt to close the gap is an area of weakness that I would look for an opportunity. What else do I have here? This last week's high just traded right to it in the overnight. I'd like to see another attempt at acceptance above last week's high. This opportunity down here to fail to close the gap looks like it was a pretty good opportunity. Unfortunately, that may have passed. 10-year. Well, we've got a little bit of consolidation here at our weekly kickoff low, which has been overall supportive. We added 32,000 in open interest on higher volume off that level yesterday. Well, we know rates are heading higher, meaning these lower yield bonds and notes, they're going to have to price lower to sell. What's it look like on the 30-minute chart? Really just kind of looking for opportunities to continue to sell strength in this market. You got to be careful with the vicious pullbacks, the face ripping rallies in markets that are breaking. What do we have? Well, we overnight shorts, still holding those overnight shorts, no gap. Last week's low here somewhat impactful for us today. You never know when these things are gonna be impactful. I'm going to try and stay patient as long as we're in value, as long as we have an opportunity to perhaps get an execution down here near weekly kickoff low. Again, I'm going to try and stay patient. One of the more fascinating markets that we've been watching now is the natural gas. So it's rolling today or tomorrow. Watch the volume. You're in May now. May is looking pretty thin, but not as thin as June. By tomorrow or Monday, June will be the front month. We'll be talking about that tomorrow morning on the forecast. I'll double check and see where the volume is for everybody. But today I would still be trading May. It seems the volume is still higher in May. It may change for us today. The scheduled roll is tomorrow. So volume and open interest are going to be extremely blurry. The pullback yesterday to the downside on lower volume may just because the market is rolling the volume into the next month. We lost 6,200 in open interest on that pullback, but again, that is likely going to be rollover related to some degree. We still know that we have reversal patterns above, and those are going to be my ruling reasons to look for opportunities to look for shorts in this market. We look into sell strength. It's the way it looks. Now, here's the reason for that again. Well, here, let's take a look. We have a bearish engulfing pattern right here. Reversal pattern. We also have a island top. The market opened, gapped to this range, gapped away from this range. This is an ominous sign. This indicates price has gotten too high and is being swiftly rejected in the longer time frame. Where are we today? Well, we get settlement down here, 693 approximately. We're in range. We were kind of wrestling inside and outside of value. Again, I'm going to try and stay patient. I don't see that there's a lot of overnight inventory for us to worry about here. But as we get closer to the high of the range from yesterday, value high from yesterday, and of course, weekly kickoff level here, which is 736, which is, if you remember, a swing high from back in of November of, well, let's see, what was it again? 08? Yeah, November of 08. Haven't been up at this level for a while, have we? All right. All right. Always blah, blah, blah. Talking heads. Yep. About it. All right. So we've got about 2 minutes when we're supposed to start working on make Hogue markets. So I'm just going to take my deep breath. Remind myself to stay humble, grateful, and creative in my trading today. Looking forward to you guys making me some money. I'll be in that room as soon as possible. Looking forward to seeing you there. Let's get a couple of people to talk. Let's get a couple of folks to share their screens. And let's see if you guys can come up with some good trades. We don't have to trade. There's nothing for us to do. That's okay. This is your decision. I'll see you there in about 1 minute. Get out there and profit. Trade well today. Be kind to yourself. Be kind to others. Keep praying for peace. And I'll see you in a couple of minutes.